Hey everybody, the stock market is close to a record high. I think the S&P 500 actually hit a fresh record high a day or two ago before I'm recording this, but that's not the case throughout the stock market. One area that has just been getting clobbered lately is home builders. Tyler Crow is joining me. Um, we might have actually found an investment opportunity Tyler Crow is positive about right now. I keep asking him about all these other companies, but I think we might have found some. So before we dive in, take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So just to kind of give you some of the numbers, um, home builders have performed terribly lately. Out of the five or six home builders I follow on a regular basis, the best performer in the past year or so has been NVR. Uh, Ticker symbol is NVR. I keep getting called out for forgetting ticker symbols. That one's easy though. They are only 28% off their 52-week high. Tyler's beloved Green Brick Partners is down by 29% from its 52-week high. D.R. Horton, the nation's largest home builder that built the house that I'm recording this in, is off 36% from its all-time high. Um, the one that I always talk about, and I see Tyler already starting to smile. Dream Finders Homes is the worst performer on that list, down by more than 40% from its 52-week high. Um, all for pretty similar reasons. The discrepancies in performance between them have a lot to do with the geographical markets they're in. Some markets are getting hit worse than others. Florida's real estate market is particularly bad, and that's where Dream Finders is based right now. That's really cooled off. Um, you know, markets in the Northeast have actually done pretty well. That's where a lot of the other builders that I talked about are based out of. But we just saw that home builder sentiment, essentially what builders are thinking of the real estate market, is at a 5-month low, and the biggest reason is tariff concerns. So, just to kind of name some statistics here, about 1/3 of the lumber used in building houses is imported, mostly from Canada. And it's not just the lumber. 1/3 of appliances that are installed in new homes come from foreign sources. And there's a lot of steel and aluminum used in the home construction process as well. And we keep hearing that we might just have across the board tariffs on that. So that's a concern. Interest rates are still high, which in recent years has actually been a positive catalyst for home builders because it's kept existing home supply very low. And, home builders can offer mortgage rate buy downs, things like that. One in my area is offering like a 4.9% mortgage rate right now, which is a lot better than 7. So, Tyler, one, are you still a Green Brick Partners fan? And two, what are your thoughts on the home builders just in general getting beaten down like this?
Well, I mean, there's two things. We've kind of explained why. I mean, typically it's land, labor, and lumber, but this time it's lumber, labor, and LIBOR with interest rates. So it's a little bit different in terms of like the risks. But look, this is a cyclical industry, right? And I think one of the things about investing in cyclical industries is to be willing to invest during times of distress. Like, as this doesn't look good, right? But I don't necessarily know if this is like Great Recession level bad in terms of, for the industry, right? I don't see this as like crippling any of these companies to the point where, they could be borderline insolvent or trading for, pennies on the dollar for their book value. They're trying to unload land because they can't get capital. I don't think we're going to reach that sort of level. Margins are going to decline. I don't, it's hard to see that any way around that, between higher costs of labor, because immigrant labor is a huge component of labor in the construction industry. If you have higher lumber costs because of tariffs on Canadian lumber and other imported lumber, if you have higher tariff on steel, all these things are going to impact margins, and I don't know how much more you can pass along price, because you have to compete against existing home sales, and existing home sales don't have to compete as much on the labor and lumber thing because they're already built, right? So, you have a ceiling on what you can do. And so basically you just going to have to take it on the chin on margin and use, like you said, mortgage point buy downs as the incentive to be like why it's worth it for people to maybe pay a slightly higher for their home price. That is going to impact margins. There's no getting around it. So we're probably going to see net income declines. The nice thing is that, for as long as we've been saying it, there is still a structural deficit in housing. There's still people going to need to buy housing. This isn't a thing that just kind of is going to evaporate over time. And for people who are, if you have invested in cyclical industries before, these are the things that are supposed to test your mettle as a cyclical industry investor. And typically the times when 5 to 10 years from now is when they become the most beneficial for you in terms of or most profitable is buying in times like this. I think this is one of those moments where you can really look at some of the best quality companies that often trade for premiums in this industry, despite the industry never really trading for a premium in the first place. But you mentioned NVR, probably the best in this business. And if you looked at its most recent earnings report, its financials looked the best. It still actually had expanding margins. It grew revenue by 16%. Its backlog on a dollar basis was actually larger. I think they were probably the only one I saw, and really looked into their quarterly earnings report. I didn't get to see everybody's, but the ones I went through, this was the only one that had a higher backlog. And so things like that suggest that NVR is the best suited to weather through the storm. We've always said they're the best operator, and as you said, off something like 20-something% from its 52-week high on a year-over-year basis. It's down 1%. At 14 times earnings is still the most expensive home builder in the industry, but it's a much more attractive price than when you're trying to do it for.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.